If you love to lose money from trading the stock market, then do the 5 things in this video I'm about to share with you. But if you like to make money, if you like being profitable, do the opposite. And I'm going to tell you how to do exactly just that in today's video. And if you stick around to the end, I'm going to share a bonus concept that can help elevate your trading. All of that and more in today's video. What's going on, everyone? Jerry Ritz here. Courage pays better than fear trading. And I know that traders out there love to lose money. Said no one ever. We like to make money. We like to be profitable. However, what I see consistently time after time is traders continuing to make the same mistakes. And so what I'm going to share with you today is if you like to lose money in the markets, continue to do these 5 things, starting with number 1. Trade without a plan. You see, going into a trade without your entry identified, without your stop loss identified, without your profit taker identified, and without a plan for, as the stock moves and retraces, how you're going to take partial profits, how you're going to move your stop loss to protect yourself. If you haven't thought through that and planned that out, you are setting yourself up for failure. And essentially, you're just saying, hey, this looks good, let me buy here, let me short here. And you're trusting the whims of an irrational market to make you money. If you want to continue to see your bank account drown and be red, trade without a plan. Tip number 2. If you want to continue to see your bank account drown and be red, trade without a plan. If you love losing money in the stock market, turn your day trades into swing trades. We call day trades for a reason, because you are in and out from 9:30 to 4 p.m. Eastern time. When you close a position within that time frame, that is a day trade. A swing trade is anything that lasts longer than a day. And here's the thing, many of you out there, you get into a day trade with a day trade plan, and then it doesn't go according to what you thought, and then you hold it. And then what happens from there? It tanks, it drops, and you get trapped, you get stuck, and you watch that balance just decrease and go down and be red and get redder. And you're frustrated, you're mad, and you're upset, but you have only yourself to blame, because had you have accepted the loss early on when it was just a day trade, you would have preserved your capital. And if you want, you can have a hybrid strategy going into a day trade where you say, hey, this is a day trade, but if it hits these conditions, I'm willing to shift it into a swing trade. So if you're planning for that in advance, that's okay, because you're having integrity to stick to your plan. But if you're continually turning day trades into swing trades, get ready to drain your account. Number 3. Don't review your trades and don't review your profit and loss data. There's no need to study what went well, what didn't go well, what you did correctly, what you did incorrectly. There's no need to study that. And if you like losing money, just don't bother at all. But I know you guys out there want to grow, want to excel in your trading, and you have to build the practice and habit of studying not only your wins, but also your losses. To know, hey, I do this really well. Hey, I struggle with this. I could get better at this. And that reflection, that self-evaluation over time is going to bolster your trading. It's going to make you a better trader. So you have to build a practice, whether it's daily, at the end of every week, and definitely at the end of every month. You at least need to be doing that, but you have to reflect on your practice. You have to reflect on your trades, because that's what's going to help you be successful in the arena of trading. Number 4, you trade off of your gut. Hey, I have a good feeling about Tesla today. Hey, I have a good feeling about Microsoft today. Oh, I think Meta is about to drop really hard. Let me short it. Timeout. No. If you love losing money, then yes, trade off of your gut, your hunch. But I'm here to tell you that that is a recipe for disaster and a pathway to a red account. You have to trade off the technicals. You have to trade off the charts. You have to trade off the candlestick patterns, volume, moving averages, whatever your strategy is, but your gut cannot be your primary strategy. And some of you might take exception to this and say, well, I have a strong intuition, I have a strong instinct. I'm not saying deny your instinct or intuition, because that is something that's going to grow and develop over time as you study charts, as you back trade, as you practice trades. It's something that becomes sharper and helps make you a better trader. But you can't exclusively rely on, hey, I'm just quickly looking at a chart, I'm going to do this. No, you have to plan out your levels. Again, going back to that planning concept. So the key takeaway here, if you like losing money, just trade off your gut. And tip number 5, you think of your losses, or you think of costs for TradingView, or the fees that you're paying on a trade, or costs for educational materials, or a losing trade. You look at them as expenses and costs and not investments in yourself. Here's the thing. Here's the reality about trading, and I say it all the time. This is something that you have to be patient with, you have to be gradual, and you have to be willing to accept that you are going to lose. Period, point blank. It's going to happen. But part of this process is investing in yourself and seeing simple things like, hey, yeah, I'm paying some commissions on my trade. That's my tuition for being able to have the privilege of clicking a button and making money and getting it deposited in my account. Oh, I lost this trade today. Look at it from this perspective. Hey, somebody on the other side of that trade won. It made their day. Or, hey, I paid for this course. It was an expense. It was a cost. Hey, that just made you smarter and a better trader. So stop framing your losses, the purchases associated with your trading, your fees, stop looking at them as nuisances or costs. Look at them as investment in yourself to grow as a trader. And listen, I saved this one for last. This is a bonus tip. If you like losing money in the markets, take other people's trades. In the current day and age with X and Instagram and all these other social media areas, people are constantly posting their trades saying, oh, I'm doing this, I'm YOLOing that. That's all well and good, and you can learn a lot from those people, but they have their own unique edge, their own unique way of looking at charts. And you can't let that dominate your approach. You have to be yourself. And I've talked about before, trusting your own trading voice, your inner guidance, and doubling down on that. And I found that some of my biggest losses when I started out was because I was listening to other people and taking their trades and not trusting myself. So a bonus tip here, if you like losing money, just take everybody else's trades and deny your own internal compass. So there you have it. 5 things to keep doing if you enjoy losing money. And let's be honest, you guys don't like losing money as traders. It sucks. It's part of the process. But by doing the opposite of the 6 things that I shared with you today, I gave you that bonus. By doing the opposite, you can ensure that you at least have the highest probability approach to achieving the goals that you've set as a trader. Let me know your thoughts down below in the comments. What is one thing that you know that you need to work on and that you currently continue to do in your practice that is holding you back? I would love to hear that. I will comment it on every post here on this video. I appreciate you guys. Make it a great day, and as always, honor the moment.